Cheap housing in Ontario. That's four words you don't really expect to hear consecutively. You see prices in this province, it just makes you scratch your head and wonder, how did we get to where we are? But then I read a headline the other day that made me question whether or not the things that I'm seeing are correct. So we're going to dive into that today, plus a little more. Hello, everybody, and welcome back to the channel. It's me, Rob Marsiglio. I'm a sales representative with Keller Williams Referred Urban out here in Durham region, serving the great people of this part of the province and doing my best to bring you weekly content on this channel to kind of keep you up to date as to what is happening in the GTA real estate market. Then when I find fun headlines like the one we're going to dive into today, I want to bring you that news as well. So like I said, off the hop, cheap homes in Ontario. Then to wrap the video up, stick with me. We're going to talk a little bit about what is happening with inventory and prices more specific to the GTA market. Here is the headline in question from BlogTO. Here's where you'll have the most luck nabbing a house for cheap in Ontario right now. So wow, it's so promising. Nabbing a home, even the words they use just makes you excited. I'm gonna get out there and nab something for cheap in Ontario. Let's dive into exactly where they're talking about. And here's an infographic from that article. This is the bottom half of the infographic. What you're gonna find on each city is the obviously name of the city, the average home price for July 2023, and the sales to new listings ratio. In the article, they use sales to new listings ratio as a bit of a gauge as to whether it's a buyer's or a seller's market. So sales to new listings ratio above 60, they're calling a seller's market. And then it looks like below 40, they're calling a buyer's market. Anywhere in between there is balanced. Now on this portion of the infographic, we have 4 cities with average prices under 700,000. We have St. Catharines, we have Niagara Falls, we have London, and we have Windsor, Essex. This is what the top of that chart looks like. And again, over here, we have Thunder Bay, North Bay, Sudbury, Sault Ste. Marie, and Kingston all coming in with average home prices under $700,000. So they talk about nabbing a cheap home in some of these areas. What the article goes on to talk about is that, you have cheap housing up in like Thunder Bay, North Bay, Sudbury, but it's all pretty far from the GTA for people looking to work in this area. BlogTO, it's a Toronto publication. They're trying to cover things around Toronto, obviously. What I did is I broke down exactly, are these truly cheap homes for the areas? Like, let's look at the income in those areas versus the average home prices to see where are things truly affordable. And I broke down all those cities that have average prices of less than $700,000 and put together this chart. And what I've done is I've sorted it by time to Toronto. I use Toronto as the baseline, and then we go down through the list as we get further and further away from the city. And you can see how I calculated my affordability down here. So it's based on having 20% down based on this average price that was published in the infographic. I use median household incomes as per the 2021 census. We use a 5-year fixed mortgage rate of 5.69%. You might argue that's a little low for what you can get right now. It's just a number I went with. And then I use the CMHC's affordability calculator from their website to kind of calculate this affordability column. So you can see that Toronto, average price over $1 million. With the median income in the city, you could afford a home for actually less than $700,000. So you're talking a spread of almost $380,000 between what is kind of affordable based on income and what the average price is in the city of Toronto. Then we did this exercise down through the list, and it's not until you get to North Bay, Sudbury, Sault Ste. Marie, and Thunder Bay that what you can afford is kind of more than what the average price point is. So if you saved up a down payment in North Bay for the average priced home of $415,000 based on your income, and again, based on having no debt was the other kind of caveat of this affordability calculation, you could afford a home for $488,000, which is $73,000 more than the average price. Now, the second thing to take a look at is, let's say, hypothetically, you saved up 20% down for a place in Toronto. You realize I could only afford $686,000 based on my income in the city. Let's look outside of the city. Do you really want to be driving an hour and a half or, an hour and 40 minutes to get into the city, even though technically you're in that affordability range? The average price is less than what you could afford if you had done all that saving. Probably not. So, going and nabbing a cheap home, it's probably not a very realistic proposition. So that's kind of the issue I have with these articles. I understand people are trying to sell clicks, but when you see something like this, Didn't take long to put this together, just to kind of analyze it critically. Are you going to be nabbing a cheap home? Potentially, if you live up in Sudbury, live in Sault Ste. Marie, Thunder Bay, where you are making that median income and can afford a house there, that's awesome. If you're living in Toronto though and looking to nab a cheap home somewhere in the area, the dollars and cents just don't check out unless you're okay with sitting in a car for 3 hours plus per day commuting to and from work. What I'm going to hop into now is kind of what is happening in the GTA, some charts that I posted on Twitter. Follow me over there if you don't already. I want to get into what is happening with inventory and prices in the freehold and condo markets. All year, 2022, months of inventory had been higher for roughly the same time frame that we've experienced in 2023. As you can see, months of inventory last year kind of started rolling over mid-July. This year, things are still climbing. That's driven by a combination of sales slowing down as well as inventory still building. You can see that actually active listings wise, roughly 1,600 more listings on the market at this time this year than at the same time last year. It's interesting when you look at inventory broken down like this, again, just for Toronto, Durham, York, and Peel regions, the red line being properties that have been on the market for 30 days or more, black line being properties that have been on the market for less than 30 days. You can see that back on June 19th, we had just over 8,500 listings on the market at that time that had been there for less than 30 days, and we were at just shy of 4,300 that had been on the market for 30 days or more. Fast forward to our most recent gauge, which was on August 21st, and we're not quite at 50-50, but I think it's roughly 48% of listings now that are active across the GTA have been sitting on the market for 30 days or more. And what you'll notice is right around that June 19th date is when sales really started falling off in the majority of markets. So Halton and Durham have relatively held up compared to some of our other markets, but you can see Toronto right from that June 19th reading where kind of we had the biggest spread between listings that had been kind of stale, we'll call them 30 plus days, and listings that were less than 30 days. Sales started to drop off, and that's when that gap really started to close as well. And you can see the Toronto freehold market, that rate of sales has been in a relative free fall, I'd say, for the last 2 months now. Kind of condo market started a little bit earlier, but York and Peel region following that same pattern. Again, Durham and Halton regions, they've held up a little better, and I think it's actually for opposite reasons. So on the Durham side of things, the affordability factor in Durham, it's still the most affordable pocket of the Greater Toronto area. It's still kind of the best proximity for the price, not value of the homes, but the price of the homes that you're getting there. Halton region has more to do with household incomes. They have some of the highest household incomes in the Greater Toronto area. So the affordability factor, yes, things are still less affordable, but it's higher net worth, higher income individuals buying out there. Sales haven't slowed down quite as much in those two markets. And to wrap up lastly with prices here, what is going on with sale counts and median sale prices of freehold properties first. Halton, like I promised, you're back in this chart here. For week 33, the current week we're in right now, so far, our median sale price is just over $1.1 million for a freehold property. It's down about $150,000 from where we peaked out in week 18, where it was $1.3 million. You can see sale counts for the last 2 weeks are the kind of two slowest weeks we've seen going back to week 4 and week 5 of 2023. And on the condo side, not quite as drastic of a drop, both in terms of percentage or dollar volume. And it's been a little bit more smoothed out. You can see this orange dotted line. Again, that 4-week moving average, $665,000 roughly was the median price point this past week. The 4-week moving average is about $670,000. So we're kind of right in line with what we'd expect over the past 4 weeks. Same story on the condo side as we saw in the freehold market. Sales, this number will jump up a bit as we have a few more sales reported, but you can see kind of the slowest couple weeks going back to early 2023. That's all the info I have for you this week. I hope it was hopeful to see, is there truly an area of Ontario where you can nab a cheap home? I also like to keep you posted as to what is happening with that inventory and sales prices. You can see inventory still on the way up. Prices are still on the way down. The next big testing point is going to be September 6th. We'll see what they do. Will they hike rates? Will they hold rates? I doubt they will cut rates. Between now and then, I'd anticipate these next couple weeks. Historically, they're really the two slowest weeks of the year, with the exception of kind of those winter doldrums end of the year over the New Year break. People enjoying the last couple weeks of summer before the kids are back in school. So I don't anticipate too much change in the trajectory we're seeing over the next 2 weeks. Like I said, the next big point will be September 6th. What happens there with rates? Because that's really the story there. As rates go, prices go kind of the opposite way. Thank you so much for sticking with me through another video. Until we speak again next time, please stay safe and cheers. Hey there, I really appreciate you watching this video all the way to the end. If you enjoyed it, I've got another video for you right here on the screen. And, while you're here, maybe just click on my face, subscribe to. I don't want you to miss anything going forward.